The Securities and Exchange Commission of Nigeria today hosted the third edition of its budget seminar in Lagos. It brought together stakeholders in the Nigerian capital market ecosystem. Giving the presentation on the theme, Budgets, Elections and Capital Markets, Risk and Opportunities in 2019, Dr. Afolabi Olowo-Okere, Head Economic and Research Department of SEC Nigeria, highlighted key areas in the 2019 budget and the economic risks and opportunities to watch.
What risk can we see? We can say GDP growth is still low for our population growth. You can't stop companies from delisting, but if they are delisting, we also are having a smaller capital market size. We should be thinking about how to attract more to be listed. Maybe the era of very big companies is no more there. Maybe we should be thinking about smaller ones. What kind of products will be useful to these smaller ones? Maybe things are now getting scaled down, unlike the big kind of conglomerates that we used to have. Maybe we should be thinking. Conduct of future election, especially subnational, is something that we should be thinking about. What would be the labor reaction to minimum wage implementation? Will states be able to do it? Would it not be, oh, you are taking it, you are giving me one hand, you are taking it from one hand? What would be that? And how does that impact on us? Is a risk for us to look at. There can be a short-run kind of unemployment issue. Higher wage means I will employ less. It can also be inflationary. How do we fund it? VAT. In the capital market, we have waiver not to collect VAT for some period. I think maybe we are renegotiating that. What of if they say, no, you can't renegotiate it, but VAT even now be not more 5%, it's now 10%. How does that affect us? Are we doing the right advocacy? What will be the impact of devaluation on our markets? Short run. Short run may be bad. Long run may not be that bad, but it's something we need to be thinking about. It's possible. It's a way to generate money anyway. Subsidy removal. Global trade tensions. What is happening in the UK? US raising rates, it has always been there. We should be thinking about this. What are the opportunities? It's still a familiar political and policy environment. It may not change much. We may expect a lot of change. It may just be change here and everything. It's very difficult to change things, right? So it's an advantage that we have something. So it's predictable. That's what the familiar means. Inflation decline and stable exchange rates, relatively good for an economy. There was this IMF study, I can't remember, maybe 2003, looking at should you just allow your money to move based on markets or you allow some kind of stability. It was found that for growth purpose, people like it to move up and down, but investment purpose, people probably like it to be stable. So most times, it's a trade-off. So we may like a stable inflation and exchange rate regime. Lower FGM bond issuance may create opportunities for subnational, may create opportunities for corporates to issue more bonds, provided such corporates are also generating values. Opportunity exists in equities market, a lot in the equities market. We've not done anything. We are small compared to the size of the economy. I mean, if we are doing 10% and some country like South Africa are doing 20%, we are still small. Yeah, we may be bigger than some people around us, but we are small. We may be looking at money market instruments. Some of them are doing not very bad. How do we take advantage? I know FMDQ is doing a lot. I know NSC trying to trade mutual fund on their platform, and most of those mutual funds have money markets as the asset they invest in anyway. It's an opportunity to consider. Commodity trading and derivative will definitely come. What are we doing? Are we preparing ourselves for such an opportunity? if I don't know anything about derivative now and I'm an operator, I should be keeping myself or equipping people who work in my establishment to be able to trade these commodities. How do we finance infrastructure projects as capital markets? How do we invest in eligible companies under tax credits? And how do we attract restructured? If government is doing a lot in the oil sector, how do we ensure that these companies, when they are restructured, they find their way into the capital market?
The seminar featured a panel session that discussed developments around the Nigerian economy and prospects for the capital market.
It's on that note, I'm also challenging operators here to seize this opportunity of a new government by May to market a lot of state governments to come to the capital market to borrow. Because what has become clear is that a good number of them have been doing capital projects with loans from the banks. You've just said it here that the average tenor of bank loans is 2 years. So if you are taking a 2-year loan to do a road project, that's clearly funding mismatch. So the governors should, the attention should be turned to the capital market for developmental projects. Dr. Lowekere said it clearly that throughout last year, no state government issued bond. So we should encourage state governments to come to the capital market and borrow for developmental purposes. That's one of the things I would like to see happen this year.
The one imperative for me is for the government to fix the outstanding reform issues in the power sector. So the bankability of that sector has been affected by the fact that government has not gone through with the promises that it made to private sector investors, whose funds actually are the funds that have, been put in this market as part of the power reforms that we initiated. Now, they're left hanging halfway, and that is affecting the entire sector. It's our number one problem, and that's what I would like government to fix.
If you decongest this, if you decongest this budget into the individual component, you realize that the current expenditure budget increased from 3.5 trillion to 4.0 trillion in 2019. So in effect, what we're saying, we do not even have enough headroom to build infrastructure, to spend on the capital infrastructure. We are still expanding the recorded expenditure budget. And the government is thinking that we continue to do the same thing every year after achieving the same result. We seem to be a country where we have a coming tsunami and we are strolling around the park. If we don't do nothing, we're all going to be consumed. The very simple thing that we're talking about, if you look at the current budget and the government is spending more and is still going to spend about 1.4 trillion in subsidizing petroleum products, nothing will change in that sector for the next donkey years. So why don't we compare as a trade group, presently, not really compare the government, but bring it clearly, simply to them that, look, we can't continue with this petroleum subsidy. Let's even start from a low-hanging fruit. Take out the petroleum subsidy. The people who think are benefiting from it are not benefiting from it. And then we will say 1.4 trillion. Put the 1.4 trillion in capital expenditure. You build the Lagos-Ibadan Express Road, 200 billion. You will build the Enugu-Port Harcourt Express Road. You will complete Kaduna Express Road. And these projects are less than 1 trillion. So if we only take out the subsidy, every year we spend 1.4 trillion on capital expenditure, you're going to see a massive infrastructure renewal in this country in the next 10 years. I think we should start from that as a low-hanging fruit.
So in next year's budget submission, the SEC, under the leadership, working with the actors, operators in the industry, should at least come up with a paper that will advise government on how it can turn its existing stock of fixed assets into liquid assets by securitization. If you can do that, then you'll be asking government to do one thing. If they don't do it, they cannot blame you. When you do those kinds of things, then you can be telling government to replicate, extend, modify, adapt. Those are the kinds of things that I want you to be doing, not to be sitting down here and say, the government is not doing something for us. Thank you very much.
I think the government needs to move to revenue bonds as opposed to government doing things. And I mentioned Visionscape because it sent a little frisson of fear into the market when you don't have that kind of security. And if government wants to assist, then they can do it by way of guarantees. I also feel government can sell we'll privatize state-owned enterprises, and let's just get rid of all this emotion we have attached to these assets, and let's raise the money. And most importantly for me, I think we need to see where our money is going, and we need to have transparency. Everybody knows I'm a big sukuk, or infrastructure bond proponent. I think we should tie our capital expenditure to specific projects. I'm delighted that government is moving away from domestic borrowing to foreign borrowing and creating space for subnational and corporate bonds. But I'd like to see that foreign borrowing tied to specific projects. And Sukuk provides a very good opportunity to do that. If you could have one power project tied to our foreign borrowing, I'd like that level of transparency. I think it's time for business unusual.
The Acting Director General of SEC Nigeria and some of the panelists speak further on the 2019 budget seminar.
Given what we have done today, there's need for us to sit down again as a capital market community and come up with how do we take our destiny in our hands? How do we stop being beggarly and then say, this is what we want government to do and drive it ourselves? That is what this budget seminar has revealed today, and we intend to do that.
In all of this, okay, the major concern here is how the budget can be used to, stimulate the capital market. And the key there is spend more on capital projects, also ensure that the budget is implemented. The other thing too that was talked about here is the effect of election on the market. There's no doubt that whenever elections come with a lot of uncertainties, there isn't clarity in the political space. Okay, that has the effect of dampening investors' confidence. Lowering, if you like, animal spirits. Animal spirits, go down. But when elections, go on and they're peaceful and they're violence-free, the market tends to also react, positively, towards it. Now, what we find happening now is still the effect of anxieties and uncertainties surrounding the 2019 election, in spite of the fact that a number of companies have released some results that you could say, are good.
I also made a mention of the fact that at a point when we do not have the revenue to meet basic capital expenditure, we cannot continue to fund consumption of petroleum products as a form of subsidy. We're currently spending about 1.4 trillion naira on that. The effect of 1.4 trillion investment in capital expenditure, capital goods in this country will be so massive that should we spend 1.4 billion year in, year out, in the next 10 years we would have spent 1.4 trillion. We would have spent something like 14 trillion on infrastructure, and they would have the necessary impact on the economy. So we need to, one, break away from the current tradition of funding all capital expenditure from budget allocation because it's not sustainable. Two, we need to rationalize some of the government recurrent expenditure, including the expenditure on fuel subsidy. And three, if we're increasing the remuneration of workers, we also demand higher quality of service from the high level of productivity, which should lead to rationalizing the headcount of the government and freeing up those who are idle to go and engage in private sector activities.
A major takeaway from the third SEC Nigeria budget seminar is the resolve of stakeholders to position themselves and constructively engage the government on driving policies that will deepen the capital market.